What is going on, everyone? Platinum B is coming at you with yet another video. Today we're going to be taking a look at a somewhat older article, but an interesting article nonetheless. And the reason I brought up this article is because I made a video on Saturday talking about pre-33 gold versus pre-64 silver. And this article gives a little bit of interesting points about the history of the gold to silver ratio and why it's important. So without further ado, let's get into it. Okay, guys, so we're going to be taking a look at this article. We're going to dive right on into it. But first and foremost, I want to key in on the date that this article was written. That is May 25th, 2010. So this is a rather older article, about 11 years old at this point. But I think it hits on some key points, right? So this was written at the very, or just before, really, silver hit one of its all-time highs. And so silver was in a different place and gold was in a different place at this point in time. So please take that into consideration as I begin to read and discuss this article. But there are some interesting points that I still think we can learn from this article. So we're going to get into it nonetheless. So it talks here about how, as gold enjoys the strongest bull market it has seen in a generation, many commenters have pointed to its secular climb upward via measures such as the Dow priced in gold and accompanying ratio. The Dow-gold ratio since 2000 clearly illustrates the strength and resiliency of precious metals the past decade and carries implications for the next few years for precious metals as a store of value through these uncertain times. For those with a higher risk tolerance, there is also another ratio that could provide useful insights. The gold to silver ratio points to silver as being undervalued when one considers its historical performance. So as we saw in the video that I posted on Saturday, gold to silver ratio has fluctuated over time, and it's been different at different points in time. So it's not always a solid thing to go on, right? It is something to consider and look at, especially if you were thinking about switching from silver to gold or gold to silver. It can work in your favor in that aspect, but it is something to watch closely, but not completely and solely rely on. Down here, it says silver is about 17.5 times more abundant than gold in the Earth's crust. We know this as stackers, and that's a point that we look at as to what the gold to silver ratio should be based upon that alone. This ratio was recognized by civilizations as currency systems were developed over time. Thus, in 1792, the newly formed U.S. Congress passed the First Coinage Act. The act officially established the dollar as currency, defining the dollar as a weight of pure silver, grains to be exact. A quarter eagle 250 was defined as 61.875 grains of gold. The act legally set the gold to silver ratio at $15. Now, we looked at the historical ratio, and we didn't go as far back as 1792, obviously, but that's an interesting point to look at. The government actually implemented the legal ratio at 15. So perhaps that's what people are referring to when they say that they think the gold to silver ratio will achieve its previous ratio at the point in time where it was set at 15 to 1. And realistically, with 17.5 to 1 being in the Earth's crust, perhaps that's where the ratio should be at. I know a lot of people would love to see that, but I don't know if it will happen or if it won't. I'm really up in the air on that point. It says here in 1834, Congress passed the Second Coinage Act, slightly tweaking the gold to silver ratio from 15 to 16. The better reflected market values at the time and drew it closer to the natural ratio. Things began to get interesting in 1858 when silver was discovered at Comstock Lode, Nevada. The resulting influx of ex-49ers and subsequent discoveries led to the proliferation of silver mining as an industry in the 1860s. Needless to say, this threatened to collapse the price of the metal in response. The 1873 Fourth Coinage Act discontinued the minting of silver dollars and decreed that silver coins above $5 were no longer legal tender. Interesting. I didn't think there were silver coins above $5, but I guess there were. That's something I'll have to do more research on. Thus, the gold to silver ratio was allowed to rise. Silver advocates And miners for the next generation would refer to this statue as the crime of 73. The closest the U.S. came to reintroducing silver as a monetary metal was when William Jennings Bryan advocated bimetallism during his ultimately unsuccessful 1896 presidential campaign. Bryan argued that it would induce inflation and help indebted farmers along with the rest of working class America who had lived through a deflationary economy from 1873 to 1896. The debate over this at the time was aptly summed up by the metaphor of the yellow brick road in L. Frank Baum's The Wonderful Wizard of Oz, originally published in 1900. It should be noted that in the original story, Dorothy's slippers were silver, not ruby, as was made indelible in the classic 1939 film version. Indeed, the name Oz, as in ounce, implied that bimetallism was the golden road to renewed prosperity. Very interesting stuff. Very interesting stuff. Who would have thought The Wizard of Oz had to do with gold and silver? Should be every stacker's favorite movie. But down here, we're going to look at a chart. We're going to look at the gold to silver ratio from 1900 to 2008. And as you can see here, well, you can't really see it in the video, but this chart shows the gold to silver ratio over the past, around 100 years. And it's interesting stuff to look at. Down here, it says in the early years of the 20th century, the ratio rose to the low 40s, but fell back into the teens during the roaring 20s after Roosevelt confiscated gold from the American people in 1933 and devalued the U.S. dollar by revaluing an ounce of gold from $20 to $35. We keyed on that point in the last video I posted about the pre-33 ratio, in that the government set gold price at $35 just because they kind of just felt like it, it seems. The ratio nearly cracked 100 in 1939. Now, we saw this as well. After Bretton Woods, the ratio fell to around 20 amidst the economic prosperity of the post-war era until Nixon abandoned the gold standard in 1971. As the price of the yellow metal floated, gold outperformed silver until the fallout from 1973 oil crisis. And then for the remainder of the decade, silver outperformed gold as the ratio fell. Restrictions on the private ownership of gold were lifted in 1974. So that's interesting stuff, for sure. And it's interesting how the government has had such a major influence on the price of the metals, just given the legislation that has been passed during different points in time by different administrations. Says here, meanwhile, in part due to the restrictions in gold ownership prior to 1974, the Hunt brothers began to buy large quantities of silver beginning in the early 70s. We know this because we've seen where silver was during the Hunt brother era. We saw that it was definitely changed based upon a couple of guys just wanting to corner the market. The gold to silver ratio hit a bottom of 16 at this time. In response to this, the COMEX introduced Silver Rule 7 in early 1980. Steep restrictions were placed on leverage and the use of margin when buying commodities. Immediately, the price of silver began to fall, culminating in a 50% drop at the end of March. The heavily leveraged hunts were wiped out, and silver continued to fall even faster than gold, which itself crashed from $850 to $600 in just 3 months. By May 1980, the ratio was back at 40. So the ratio has really been all over the place over history. Different things have caused different changes, and it's just really hard to gauge what's going to happen next. So that is one of the reasons why I say it is key to diversify when stacking precious metals. Gold, silver, and even platinum, yes. But as we can see here, the gold to silver ratio, 1970 to 2009. Interesting stuff to look at. The ratio is in red. Gold is in green. The ratio is in red. Silver is in blue. And as you can see here, it has been different at different points in time. Large gaps here, smaller gaps here, and just interesting stuff overall. So down here it says, for the duration of the decade and into the early 1990s, the ratio continued to rise because gold outperformed silver, but only because it did not lose as much of its value. While the ratio reverted back to its 20th century average by 2000, gold and silver did not bottom until 2001 and 2003 respectively. At that time, silver once again turned up and the ratio began to fall. This trend continued until the onset of the 2008 financial crisis. The 2007 to 2008 spike in the ratio provided a very attractive entry point for those who were in the position to take advantage of it. So again, yet another reason why it's important to diversify. The 2007, let me read that again. The 2007 to 2008 spike in ratio provided a very attractive entry point for those who were in a position to take advantage of it. By diversifying in precious metals, gold and silver, and even platinum, when the ratio ends up in your favor, you have the ability to swap metals to benefit you in the long haul, because we understand that there's generally speaking an average ratio, and the ratio gets small and the ratio gets large, but there's a middle ground. Somewhere there's a middle ground. I don't know the exact middle ground, but I know it exists. And when you're in the middle ground, it's good to acquire both. When there's a large stretch, it's good to acquire the more undervalued. When they're closer, it's good to, again, acquire the more undervalued, but also perhaps trade for the more undervalued. It's best to trade when the margins are so wide or so close. We can kind of think back to March 2020 when silver gold ratio broke into the hundreds. It got up to almost 115 or something crazy like that. So if you were able to switch gold into silver and then watch silver go up and the ratio decrease, you were able to switch back into gold and end up better off in the long haul. There's a lot of people that like flipping the ratios and using them to their advantage, and this article kind of keys in on that. So this brings us to today. Mind you, this is 2010, not 2021. The ratio spiked to over 80 in 2008 and was over 70 as recently as February, currently standing at 66.73. Interesting stuff. So we are kind of seeing some similarities. We're kind of seeing some similarities between 2010, 2011, and 2020 and 2021. The trajectory is downward, but it is currently in an interim upswing. This creates a potential advantage for investors in 2010 as silver becomes more undervalued as in 2008. It is a good opportunity to get in. Of course, it's not going to fall to its pre-1873 ratio of 15 to 16 anytime soon, despite the historical geological ratios. The ratio's average was roughly the range of 47 to 50 after the Industrial Revolution and throughout the 20th century. The gold to silver ratio always falls during precious metal commodity bull markets. So at the very least, it makes sense that it would fall to its historical average. However, a much lower ratio is not out of the question if the current bull market and commodities sustains for long enough. In the 1970s, ratio averaged between 20 and 40, falling below 20 during the final spike in the early 1980. With the current trends, if precious metals stage another breakout in the second half of 2010, expect the ratio to fall between 60 and possibly break downward into the 50 to 55 range. So again, here we can see the gold to silver ratio May 2007 to present being 2010. So there's the chart for you. And that wraps up this article. So there's interesting points and there's interesting things we can learn. Even though this article is a very old article, we can still learn some pretty good stuff from it, I think. And I will definitely be linking this article in the description of this video down below. But I appreciate all of you all stopping by and checking out my video today. Be sure to check out my other videos. I have a lot talking about platinum as well as other precious metals. Be sure to hit that like button on your way out. Hit that subscribe button so you can stay up to date with future updates on my channel. And with all that being said, guys, until next time, we will see ya.